welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we'll start taking that. But before that, let's have a look at what the markets are up to. So Cheryl, first day of the week and looks like a good start for the benchmark indices, at least holding in the green right now.
Absolutely. A very good morning to you, Shrishti. Looks like a bright morning coming in for the benchmark indices, whereas the Nifty Bank that is actually slipping to the negative territory as we speak. You have Nifty Bank that is underperforming the benchmark indices, 2/10 of downtick coming in, 0.2% downtick coming in for the Nifty Bank. If you look at the markets, yes, trying to hold on to gains actually as of now. The last time I checked, yeah, it is actually off the day's highest point. Right now, you have Nifty that is now struggling to hold on to 19,550 levels. Sensex is trading above the 65,800 mark. Talking about the list of gainers, then you have Mahindra & Mahindra that is actually seeing an uptick of about 3.5%, top gainer on the Nifty. Remember that the management gave clarity on the RBL Bank investment, as well as you had today the management of M&M who clarified on ET Now as well the rationale behind that sort of an investment. So the street is kind of liking the commentary coming in from management. 3.5% uptick coming in for M&M as we speak. Divi's Laboratories is the other counter that's seeing good uptick, 2.7% uptick coming for Divi's Laboratories. Sun Pharma, Grasim are the other set of gainers. But on the flip side, it is Britannia that is under pressure. It is the top loser on the Nifty post its earnings. You have SBI, Nestle, Bajaj Finance are the other set of losers at this point in time. If you look at the advanced decline ratio, for now looking tad bit in the favor of the gainers, but as you can see, the markets are actually drifting lower as we speak. Talking about the sectoral indices, then you have metal index that's among the top sectoral loser at this point in time, while on the gaining front it is the pharma index holding on to good gains of 0.9%. But that's the way how the markets are looking like at this point in time. Shrishti, yes, we did start the day on a very positive footing, but now we are drifting lower. But we have a new entrant into the bourses today, isn't it?
Well, yes, absolutely. That's Yatharth Hospital listing, but not a stellar one because the stock listed at a premium of 2%. But let's understand from the management that going ahead, what is the growth outlook and what will be the key focus area. So let me welcome on board Yatharth Tyagi, who is the whole-time director at Yatharth Hospital and Trauma Care Services. Hi, very good morning. Firstly, would like to know on your expansion plans maybe, because what we understand is that you are Delhi-based, and Delhi NCR is a region where we have seen that a lot of established players already have a strong presence. And the last time that you mentioned that you have expansion plans, they are also around the region as well. But it is a highly competitive market. So going ahead, how do you see you navigating through this competition, as well as what will be your growth plans?
Hi, good morning. Thanks for having me. So definitely in the coming years, there are huge expansion plans, both organic as well as inorganic. So, organic is the hospitals that we are already running in Noida Extension and Greater Noida. We are expanding these hospitals. We have recently acquired the land parcel adjacent to these hospitals, where we're increasing the bed capacity. And these two hospitals are among the top 10 largest private hospitals of Delhi NCR. I think once this expansion is completed in these two hospitals would be, I think, among the top 3, top 4 largest private hospitals of Delhi NCR. So that's the existing organic plaque. As far as inorganic is concerned, we are looking to expand in the region nearby. You mentioned we are right now located in Delhi NCR, but we also have a hospital in Jhansi Orchha, which is in Madhya Pradesh, which is around 500 kilometers from the Delhi NCR market. So going forward also, we are looking to expand to become, a leading North India brand. So we are looking in states like Uttar Pradesh, Madhya Pradesh, Delhi NCR, Haryana, Punjab. So this is where you will see, our new acquisitions and hospitals coming up in few years. And I'm sure in next around 2 to 3 years, we'll be easily doubling our bed capacity. So right now we have 405 beds, and I think in few years, this will easily cross 3,000 bed capacity.
Right. Good morning, Yatharth. This is Cheryl also joining in the conversation. Firstly, congratulations on that listing on the bourses. Also, let's talk about your segments then. How do you see the specialty segment growing? Because your revenue from medicines is approximately 40 to 45%. Also, your 4 hospitals are seeing good growth in the cardiology revenues. Do you see further pickup in the revenue from any other segments?
Yeah, I think there are certain new segments that we have recently started over the course of last, couple of years. So these are organ transplant. So we started kidney transplant. We are doing bone marrow transplant, and oncology is where we are fully starting this year. So I think going forward, these are the departments, oncology and transplant program, where the, a lot of rise in the revenue should come. And I think in a few years, we will definitely see the share of internal medicine. This is a department which comprises of physicians, which treats lifestyle diseases as well as, like diabetes and general cough, cold, fever. So I think going forward, as our revenue from super specializations increase, like you rightly mentioned, cardiology, so this share of internal medicine should go down in a few years. And we see, more share from nephrology, cardiology, neurosurgery, oncology and transplant increasing.
But Yatharth, when we see your bed occupancy rate, and then that stands at 45% for FY23, which is actually quite low when we compare to your similar industry peers. What do you have to say about it? And going ahead, how much growth do you believe that this number could show?
I think when you talk about the overall occupancy, so that's not the the right way to look at it, because two of our hospitals are very new. So our Jhansi Orchha Hospital just started last year, so it's its first year of operation we just ended for this hospital. And if you look at the individual hospital-wise occupancy, it will give a fair picture. So Noida Hospital, which is one of our most matured hospitals, started in 2013. That hospital had an occupancy of around 85 to 86% last year, which is very high compared to industry standards. Our Greater Noida Hospital, which is again our matured hospital, has an occupancy of above 60%. And Noida Extension Hospital, and Jhansi Orchha, because these are new hospitals, we started in 2019 and 2022. That's why the occupancy is less in these hospitals, and that's why overall occupancy looks lesser. However, our mature hospitals are doing very good on occupancy, and I'm sure in the new hospitals also, in a couple of years, the occupancy should be somewhere similar to what our mature hospitals are doing in terms of occupancy.
Yatharth, when we look at your margins, then they have also seen a decline on a YY basis in the last numbers. So now that the listing is done, can we ask you on the growth outlook on the margins and what could be the likely triggers if you're looking for an expansion on that number?
See, I think as far as margins are concerned, we are having quite high margins compared to industry peers. And last 2 years were disruptive years due to COVID. So during COVID, we had higher margins, but post-COVID, that is the reason for 1 or 2% dip in the margins, because in COVID, yes, the expenses were less, so that's why the margins were high in those two specifically year. But overall, we are easily doing around 26% of EBITDA, and since the inception of the company has been EBITDA positive. So so we have maintained that growth, and going forward also, because our expansion, we are expanding our existing facilities. So as most of the doctors' departments are already kept there, so once the occupancy increases in those hospitals, margins are bound to increase more going forward.
All right, Yatharth, we leave it there then. Thank you so much for joining us on ET Now to talk about the growth plans going ahead for Yatharth Hospitals. And also, once again, congratulations on listing on the bourses. That was Yatharth Tyagi, who's the whole-time director at Yatharth Hospital and Trauma Care Services. As you can see, the stock is listed on the bourses today, seeing an uptick of 10% as we speak. But let's talk about one stock that has been on fire ever since the word go in today's trading session, and that has to be Paytm. A big corporate action has taken place in Paytm today. That is, Paytm's top boss Vijay Shekhar Sharma has actually entered into an agreement with Ant Financial to buy a 10.3% stake in Paytm. What does this mean for Paytm? What does this transaction mean for shareholders? I'm joined by Sharath to take us through all the details. Sharath, a very good morning to you. And it was a busy morning for you, I must say, because this particular development did come in before the markets could open. What has Vijay Shekhar Sharma done now? What does this mean for Paytm? Also, how does this change the dynamics for now?
Well, yes. Good morning, ladies. So, of course, Paytm has actually kept all of us busy, and of course, the impact analysis was very important. But let's just spread it out. What's the actual news about and how it actually impacts the structure? So Vijay Sharma will be acquiring 10.3% stake in Paytm, and this acquisition of stake will be happening from Ant Financial Services. Now, the stake will be purchased via 100% owned overseas debt entity, and looking at it, this will be done via OCDs. Now, OCDs are basically your optionally convertible debentures. To put it in a simple manner, there won't be any exchange of any economic value. Now, what happens is Antfin, this will cease to become the largest shareholder in the company, and the shareholding pattern, of course, post this deal is expected via direct as well as indirect holding. Sharma's shareholding is expected to increase from 9.1% to almost 19.4%. While on the other hand, Anfin's shareholding that is expected to reduce from almost 24% to 13.5%. But net, there is no cash payment, pledge or guarantee which will be involved, and also there won't be any change in management or control of the firm. Existing board remains there, and also Vijay Shekhar Sharma will continue as the MD and the CEO.
But Sharad, after knowing the dynamics, then how will it impact the shareholders? What exactly changes now, and how should investors look at this announcement?
Well, you're right, and of course, a very positive stock reaction has been coming,
Yeah.
and an overhang has actually removed. And because of that, what happens is Anfin's financial stake, which is there in the company, that sale overhang is over. But do remember, SoftBank still has 9.1% stake in the company, and that sale of overhang is still there for these shares. Apart from this brokerage, Yatharth Capital also came out with its note, and they have given out two important points. Firstly, they have stated that faster resolutions around the ongoing Paytm payment services issue is something to ponder upon, and over there is currently they are not allowed to onboard new online merchants, so that regulation overhang is over, expected to get over soon. And also this will also reduce the risk of a hostile takeover, so that is also something very important statement coming from Yatharth Capital. So overall, net it has been good for the shareholders as well as for the continuity of the company.
Thank you so much, Sharad, for putting into context what this particular development actually means for the shareholders. Also, the overhang that's now removed when it comes to Paytm, and we can see the stock react to that, isn't it? 6% uptick coming in for Paytm. But on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your queries, viewers, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock related queries. Remember, viewers, you can write to us on the WhatsApp number that you can see on your screen. Do remember to write your name, the stock that you're looking to invest in. If you have already invested in the stock, mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. And talking about our experts, today we have Kunal Bothra as well as Mr. A.K. Prabhakar joining us on the show. A very good morning to you, Kunal, as well as Mr. Prabhakar. Thank you so much for joining us on Buy Now Sell Now once again. And let me first actually start the queries from you, Mr. Prabhakar, because we have a viewer, Balan, who's written to us from Chennai, and he wants to know about healthcare stocks, and that is Shalby as well as Krishna Diagnostics. He wants to know if these two companies' stocks are good bet to bet on right now at current market price, or should he look at some other alternatives?
Healthcare as a segment, they will have a very good growth, but Shalby is something we don't track at this point now. But Krishna diagnostic companies have not done good. And here, this company is doing a lot of government projects. So it will take time. So if you have a view of 3 to 5 years, then you can enter. But if you have a shorter term view, less than 3 years, I think you need to avoid diagnostic space. But if you want hospitals, then KIMS and Narayana Hirdalia are looking very attractive in those space.
All right, moving on then, the next one that I have is coming in from Subramaniam. He's writing to us from Chennai. Kunal, for the short term, he wants to know about Nelcast. I don't know whether you track this counter. He wants to know whether he can hold, sell or add on some more. He has 120 shares at price of 98 rupees per share.
Well, you can continue to hold on. Decent volumes in the last 1 month, or I think from mid of July 2023 for the stock, and from 90 levels from that time frame, the stock has gone to 120 plus mark, which means it's been a decent volume based buying for Nelcast. The stock has not hit its major swing resistance. I think that is closer to 128, 130, which means a potential upside of another 10 rupees before you can start booking out your trading profits on the stock.
Okay, this next one, let me take it to you, Mr. Prabhakar, because it's an interesting query. It's coming from P. Subramaniam. He's writing to us from Chennai. He has 1,500 shares of RBL Bank, which he's purchased at 225 rupees per share. He wants to know whether he should continue to hold on to it or book loss. What's your take on RBL Bank, given the fact that the latest news development that we got, where M&M has purchased some particular stake in this particular bank, but they have clarified that as of now they are not looking, or they don't have intention of hiking that stake from 3.5% what they're holding currently. How does this change the scenario for RBL Bank? And as an investor, do you think that it makes sense for him to book loss? Because right now the stock is at 213, his buy price was 225.
Yeah, RBL Bank has gone through a lot of storm. So, I think the worst is there in the prices. But we need to see what is the future in store. But there are many banks which are already doing good. So it is better to shift there. Now RBL is not in our coverage, so we don't have a buy or sell. But you have Sun Bank, you have Federal Bank, City Union Bank, which are doing better, and from here we sector to recover. Even in PSUs, now Bank of Baroda is looking good, so you can look at Bank of Baroda also.
Next one is coming to you, Kunal, and this one is coming from Sunny, and he wants to know about Yatharth watches. He's purchased this particular account at the price of 1,450 rupees per share, and that too for the long term. But he wants to know, is it okay to book profits after good results and re-enter at a lower levels, or should he just stay put with his holding right now and not do anything?
I think you should stay put with your holdings now. Of course, limited chart history for Yatharth, but then for whatever history and whatever the price patterns we can fathom for the stock price, I think it looks like that the stock is going through a strong period of uptrend. And it's a very consistent kind of a manner for Yatharth, because the stock has this tendency of going into a 3 to 6 month of sideways range before it tends to move up higher. Current levels, in fact, I think last week or so when the stock was at 1400 levels, it tried to retrace back towards its 50-day moving average and then bounced back. Today the stock made a high of 1700 approximately, and from there it's retraced, which means that there could be a possibility that the stock may go into a time-wise correction, but the historical patterns for time-wise correction has resulted into at least a 20% up move for Yatharth every time the stock gets into a 3 to 6 month kind of a time-wise correction. So we can expect this time around very similar. If you are a medium-term investor, stay put, hold on to the stock.
All right, this next one also is coming your way, Kunal, and this one is coming from Prathamesh. She's writing to us from Mumbai, and he wants to know about IRCTC. He's saying he's holding 90 shares of IRCTC at a price of 295 rupees per share. He's saying the stock hasn't moved on for a while now. So should he exit or should he stay invested in the stock? He's saying his time horizon is 1 year.
So I think you should stay invested, investing at 295, which means I think you would probably have entered the second half of 2021 for IRCTC. Currently the stock is at 650 plus levels. It's confirmed a breakout of 200 DMA, and looking at the way most of these railway stocks have moved up higher, and especially the high beta names, I think it could just be a matter of time that even IRCTC picks up a lot of pace from current levels. So I think you should definitely look to hold on.
Okay, moving on to the next question, and Mr. Prabhakar, coming to you for this one. This one is from Mr. Singh. He's a senior citizen and lives in Pune. He wants a fundamental view on Sirma SGS technology for maybe about next 3 years.
No, I'm positive on that stock. See now, government after mobile now, even in laptop and other components they want to make in India, for which there is a ban, and now we have a license regime. So Sirma SGS is one of the beneficiary of that. Plus, he is talking about 3 years. I'm very positive for 3 years, but at this point of time, valuation is bit stressed. But I think over a period of time, the earnings will catch up.
Okay, this one is coming in from Sai Kumar, writing to us from Pune. He was bought BCL Industries at a price of 502, Kunal. Not sure if you track this one. 50 shares is what he's purchased. He wants to know whether he should look to sell it or hold it for the next 1 year. It is below his buy price.
So if your time frame is 1 year, then you can continue to hold on. It's trading in between 50 and 200 DMA. The only concern is that the short-term indicators are negative for the stock, and I think it's been negative since 10th of July 2023, when the stock was at 503 mark, and from there the stock has corrected more than 10%. It's still negative, but then the effect is not as strong as what was maybe a month back for BCL Industries. So you can continue to hold on if you have a medium-term time frame, because if the stock resurrects, then there could be a chance that the stock may come back above that 500 mark and try to cross over even the 530 level. So with that anticipation, I would suggest a hold.
Okay, Kunal, the next question is from B. Sai Babu from Chennai, and he's holding Power Grid, 500 shares from a price of 268 rupees. At this point in time, can he average this particular name?
Well, yeah, I think it's a good time to average the stock to 45, 47 is where the stock is trading. Again, come back to its 50-day moving average. And stocks like Power Grid are best when you try and buy them on retracements or on mean reversion points. And specifically, if you have a certain portion of your portfolio which is dedicated towards these low beta stocks and high dividend paying names. So I think in that regards, it could actually be a good time where you can look to average and try and bring your cost price to maybe as low as 250 and 255 range.
Okay, this next one that I have is coming in from Alma D'Souza. Tourism Finance Corporation, 2,000 shares, which is purchased at the price of around 85 rupees per share. Does it make sense to exit right now? Kunal, I'm sorry, this one is for you because she wants a target price as well. So if you advise her to stay put with Tourism Finance, then should she, what sort of target should she look at?
See, I would suggest to hold on to the stock as of now. Now, determining targets could be a bit tricky because the stock has not yet confirmed a quarterly breakout. So, we look out for momentum breakouts for the stock price. Just to give you an example, in 2014, the stock had given a momentum breakout in the first couple of months of 2014, and the stock was at 39 levels. And from there, in a matter of the next 3 quarters, the stock jumped up to as much as 89 or 90 rupees. Similar was the case in 2016-17 when the stock was at 82 rupees, and from there it moved up to 150, 180 plus mark. So it's yet to confirm a breakout, but then I think the distance of the breakout is just about some 5-7% from current levels, which means ideally you should stay put, you should stay invested into the stock price. If this quarterly chart breakout is confirmed for TFCI, then I would believe you could be looking at another multiplier return for the stock in a matter of 3 to 4 quarters post that. So I would suggest to stay invested.
Okay, moving on, and Mr. Prabhakar, the next query is on mid-cap IT names. This one is from VB Rao, and he's holding 31 units of LTI Mindtree from a price of 4,533 rupees. He wants to know, is this a good time to make a switch from LTI Mindtree to a persistent system now? His view is for the long term. And the second query is on Polycap. He's holding the shares with a profit of 35% currently. So good time to book profits, or can he add more at this point in time?
Polycap, I think the long-term story is still intact, so he can hold on Polycap. LTI Mindtree, there is a merger between two entities. Whenever any company where merger happens, it takes at least 2 years for the synergy to sink in. So now I think if you are a long-term investor, LTI Mindtree offers huge value, but you need to have some patience there.
Mr. Prabhakar, this one also is coming for you. This one is from Reema. She's writing to us from Pune, and she wants to know about Avalon Technologies or NetWeb Technologies. Both of them are recently listed counters. She wants to know which out of these two are good investments for one to make.
No, both these, we don't track, so I won't be able to comment.
All right, Kunal, yes, I will not take this query to you because you won't have that much of a history, actually chart history to talk about these counters. So I will actually move to the next query then. And this one is coming from Sagar. He wants to get a view on Hitachi Energy. It's saying it was a demerger entity of ABB and Hitachi takeover. He wants to know what should he do with this counter because he already has it from the sub 1,000 rupee levels. He wants to know, do you have any growth outlook for this particular counter, Mr. Prabhakar? Also, do you feel that the valuations are justified at this price level because the stock right now is trading at 4,200 rupees per share?
We also don't track this company. It is a demerged entity. We don't track it.
On the charts, Hitachi Energy?
Yeah, I think it looks very attractive. Of course, the only concern with the stock, because I've been tracking the stock since the last couple of years, when I think, if I'm not wrong, the stock was at 2,750, 800 rupees. And the only concern is liquidity because the average volumes for the stock is extremely low. But the chart patterns are a lot more consistent on the long-term time frame. As I said, I think a couple of years back, the stock was at 2,800, 2,750 mark, and it's now gotten to trade above that 4,000 levels. The all-time high levels for the stock price or the previous high is about 4,350 for Hitachi. So I would believe that it's a good stock, more consistent in terms of long-term uptrend. You should continue to hold on.
Okay, so that's the view coming in on Hitachi Energy. Continue to hold on for long term, but with this fears, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back. You're watching Buy Now Sell Now, a show where we get you answers for all your stock-related queries. And on to the show today, we have Mr. A.K. Prabhakar as well as Kunal Bothra to guide us better. And Kunal, coming to you for the next query. This one is on Cyient, and Jay Krishnan from Kerala wants to know, is this a good time to enter into Cyient with a medium-term investment horizon?
Well, it may not be the best time. The stock is already at a 52-week high as well as a life high levels at 1,600 mark. The medium-term moving average is at 1,400 for Cyient. The long-term averages are still significantly below those levels. So I would believe that it's better to buy the stock on retracement. At least 1500 is something where you can look to start buying, if not more on the downside. So I would suggest to wait out, and wait out for that phase of pause or correction if it happens in the next 1 to 3 months. And 1500 could be a good starting point for that buy on dips for Cyient.
Okay, this next one is coming from Chandrasekharan, writing to us from Chennai. And Chandrasekharan wants to know about Apar Industries, has 50 shares of Apar Industries, purchased at an average price of 3,320 rupees per share. He can hold on for the next 2 years, but what should the strategy be right now? Should he add on right now at current market price or look for some more correction? What's your take on this, Mr. Prabhakar? How does Apar Industries look to you? Do you think this stock merits adding on to the portfolio?
It is a wonderful company. They make few specialized oil, and they have very less competition also. But the stock has run up so much. If you see year till date return also, it is one of the highest. So I think any good correction you can add. But for long term, it is better to hold to the stock. But any meaningful correction, 10-15% from current, then you need to add in the stock.
Okay, Kunal, the next query is from Poonam, and she wants to exit these stocks and have been holding them for a year and finally at par to her current market rise. A couple of names there. Firstly is Birla Corporation, the other one is Aurobindo Pharma. So at this point in time, how do you see the outlook of these counters going ahead?
I think it's a good time to book out profits on both of these names. Now, that doesn't mean that I'm bearish on the stock. I think Aurobindo Pharma, we flagged off earlier that the stock has entered into an overbought territory, and 90% up, I think if I'm not wrong, for Aurobindo Pharma, for example, for this calendar year. And that's a bit of a steep when you're looking at the entire pharma stocks and how these stocks, they tend to behave. So I think in that aspect, I think it's a good time to book out profits for Aurobindo Pharma and then wait out for a decent correction to look to buy back. Same would be the case with Birla Corp. The stock is up, I think 25-27% so far this calendar year, recovered from 850 mark to 1200 plus levels where it's trading right now. The only reason for suggesting a sell on Birla Corp is over the last 1 month, the stock has been consistently taking a pause at this 1250 mark, acting as a resistance or a zone where there is huge amount of a supply coming in for the stock price. So that's one of the reasons to suggest book profits on the stock.
Okay, this next one that I have is coming in from Venkat Ramani from Bangalore. Wants to know about Sterling and Wilson, Kunal. 300 shares at an average price of 340 rupees per share. Wants to know whether it's the right time to add some more of this particular account or look to exit this one. His time horizon is 12 to 18 months.
Well, I think we should look to just hold on to the stock as of now, because adding at current levels would be a bit stretch in terms of the short-term charts, the daily charts. But then exiting the stock may also not be a good strategy, because the stock has just shown the first month of very strong price gain and the price volume breakouts in technical parlance. So I would believe that there should be more upside for the stock if you're a medium-term investor. So with a 12-month time frame, I would suggest a hold on the stock. If in case you are looking to add, then I think closer to 360 is where you should look to add the stock.
Okay, Mr. Prabhakar, the next question is from Reena Thomas, and she has 40,000 rupees in hand and she is looking to invest that money in Devyani International. Would you believe that this will be a right decision? If not, then any other stock which you can recommend her?
QSR is a very good space, but the growth right now is not happening. But if you are looking at 3 to 5 years, I don't think QSR will do bad. Now, Jubilant Food also, after a very long time, the recovery has started. So, you can invest, but have a time about 2 years, 3 years, so that you make good returns in this segment.
This one is coming from Rajesh Kakar, writing to us from Punjab, and Kunal, rate gain is what he has, 750 shares at a price of 235 rupees per share. He wants to know what should he do with this particular counter?
I think you should definitely look to hold on to the stock. It's an excellent chart. I've been tracking this stock since 180, 185 mark. The stock is at 460 plus levels. Looks to be a very attractive, very consistent chart. I've seen the volume built up as well as the indicator set up on the medium term time frame. The price history is limited, but then for whatever I've tracked the stock from those 200 to 50 odd levels, I think it looks very attractive. So I would suggest a hold.
Okay, Kunal, the next question is from Satya, and on a couple of banking names like PNB, IDBI as well as Canara Bank, he's actually making a profit of 18 to 25%. So at this point in time, should he book profits or continue to ride the rally?
See, I think you should continue to hold on if you're specifically a medium-term investor, which means that you have a time frame of another 12 months. I'll give you an example for that. In the last 4 months of this market rally, in the first phase, and the first month, the PSU banking stocks, they delivered return as an index, they delivered return of more than 15 to 18%. In the second phase, the PSU banking index, they corrected by some 8 or 9%. And the third phase, or the third rally for the index, the PSU banking delivered return of another 15% on the upside, which means that it will have its fair share of price correction, but then the eventual path for the upside for many of these stocks seems to be quite strong. The mid-cap names are the ones which have actually done well. I think J&K Bank, Maharashtra Bank, etc. These stocks have outperformed the traditional large-cap peers in the PSU banking stocks. So I would be bullish on the space, but if you have a time frame of 12 months, only then I would suggest a hold.
Okay, this next one is coming in from a viewer who's been writing to us day after day, and we've not been able to take his query. Apologies to you, Mr. Ganesh, but his query is on Galaxy Surfactant, and this one is particularly for you, Kunal. 14% loss is what he is suffering on this particular holding. He was invested in the stock since the year 2021. He wants to know, is there any possibility on the chart that Galaxy Surfactant will surpass 3,200 rupees per share, or should he look to book losses and instead look to invest in Federal Bank?
See, I think the time frame matters over here because the stock price for, or the charts for Galaxy Surfactant is not bearish, but then the stock would take a lot of time to recover. You know, just to give an example, I think 4 months back, 5 months back, the stock was at 2200 levels. Recently, the stock made a high of 3000, and from 3000, it's back again to that 2600 mark, which means that the stock is trying to define this 700-800 point range for itself. 3000 is something which could probably be retested, say, in the next 6 months or so for the stock price. So if you are a patient investor and looking to hold on to the stock for another 6 months at least, only then I would suggest a hold. If not, then if you're looking at a shorter term time frame, then I think making a switch to Federal Bank or maybe even IDFC First Bank could actually be a better bet.
Okay, Mr. Prabhakar, what's your take on Metropolis Healthcare? This question is from Mahesh. He's a senior citizen and bought 50 shares from a price of 1,500 rupees. Currently at a loss, so going ahead, any hopes on recovery? And also he's looking to add more. He can go ahead and add more 50 shares. So should he do that?
The results recently came. The growth in Mumbai region is very good, 15% plus growth. But other regions have to pick up. Because of COVID, these stocks have run up too much, and post-COVID there was a correction. And now I think everything has stabilized. So I think long-term view is positive. You can slowly accumulate stock, but don't be in a hurry. Another 2-3 quarters of pain is still there before things can stabilize and things can start up move.
All right, on that note, we'll actually slip into a break in this edition of Buy Now Sell Now. When we come back, we'll continue taking your queries, so viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, and let me continue taking your queries. This one is coming from Sandeep. This one is for you, Mr. Prabhakar. He wants to know which is the best auto stock to hold on for a period of 3 to 4 years. Also, he wants to know, makes sense to invest in Tech Mahindra right now for a period of 3 to 4 years?
Mahindra and Mahindra is something I like in auto space. In auto ancillary, we like even Bharat Forge, CIE Auto. These are few things we like. Tech Mahindra, personally, I hold, but I'm very positive in the next 3 to 4 years. Mr. Mohit Joshi from Infosys has taken over as the CEO. So I think a lot of things can change in Tech Mahindra. So I'm holding it personally.
Okay, moving on, and Kunal, the next query is on Delta Corp. A viewer named B. Soumya from Chennai has been holding the shares from an advisable holding period as well.
Yeah, frankly, my targets are on the downside for Delta Corp. So, I mean, I would probably suggest to exit the stock, and look at the charts over the last 1 year, 2 years. Yes, the recent news flow for Delta Corp has affected on the stock on the downside, but it's not as if that the stock was into any kind of an evolving trend on the upside. The stock was almost at 350 levels in 2022, 350 approximately, and from there it had halved in just a matter of, I think, 2-3 months of sharp selling in 2022. There was a mild rally, but then again, the negative news flow recently has impacted the stock price and brought the stock back again to that 180 odd mark. So it's a chart which is definitely weak on the short term as well as on the medium term time scale. I would suggest to ideally avoid such kind of stocks, even as part of your trading, for your short-term trading investments. But I think even as an investing, I would not recommend Delta Corp. My suggestion would be to exit the stock.
Okay, this one is coming from Lakshmanan. He's a senior citizen writing to us from Bangalore. Apologies, we could not take your queries earlier. But he wants to know about HDFC Bank. Mr. Prabhakar, he's not mentioned the buy price, but he's saying that he's holding this for a long term, for a long time, in fact. And 270 shares of HDFC Bank is what he has. So he wants to know whether it makes sense to stay put with HDFC Bank because he's not seen remarkable move in the stock price is what he's saying. So he wants to know whether he should look to invest in another stock instead.
We have answered it even the last time when I was in your channel. Now, when somebody is going to do a very aggressive expansion, so on FY23 they did 1,200 branches, FY24 1,500 branches, FY25 another 1,500 branches, which is almost more than 70% of the branch they are doing it. So when you do a capex that aggressive, then we need to understand there will be some pain point. And you have a merger. We talked about LTI Mindtree merger. Similar way, HDFC Bank merger. All these synergies to come, it will take 2 years. And this bank has given the best return in the last 25 years. So it will take a pause. So if you are in a hurry, it is very difficult. But if you are looking at a long-term perspective, 3-5 years or even more, then HDFC Bank is one of the best. Yes, after giving good results, there will be a pause. It has happened in many sectors and many industries. We need to have patience in HDFC Bank.
Okay, moving on, and Kunal, coming to you for this query. This one is from Venkatesh, and he needs an advice on SJVN. Can he enter at current price, at current market price? What's the outlook going ahead, and any targets for this one?
Well, first of all, it would be a speculative bet because of the high beta or rather the extremely high beta nature of the stock price. So you have to ensure that your position sizing is according to how a speculative short-term trading bet is. On the charts, yes, I think 52, 52.5 is a major support for SJVN. The stock is at 56.5 levels. Keep 52 or maybe 50 as a round figure as a stop loss for your trade, and then look to hold on to the stock for a potential target of 64 to 65 over the very near term.
All right, quickly, before we actually move on to the exclusive story that we'll be breaking for you, Kunal, very quickly, do you track techno engineering by any chance or Pitti lamination by any chance?
No, not really.
All right, so then I'll have to skip this query then. But with that, actually, thank you so much, Kunal, as well as Mr. Prabhakar for joining us on the show today for resolving all the viewer queries. And viewers, in case we've not been able to take your query today, please don't be disheartened. We have still more 4 days to go, and we'll try and squeeze in as many queries as possible. For now, if you look at the markets, we are definitely off the day's highest point coming in for the benchmark indices. Remember, the Nifty Bank is already in that negative territory. Top sectoral gainer in today's trading session has definitely got to be the pharma index, and in pharma index you have Cipla that will be in focus. And here's an ET Now exclusive. The Cipla promoters are looking to sell stake in the company is the news that we know of, but ET Now is picking up that more private equity players are interested, and also some sovereign fund names also doing the rounds. My colleague Anurag Joshi is here with all the details. Anurag, over to you. Which are the names that you're picking up this time around?
Yes, UAE Sovereign Wealth Fund, Abu Dhabi Development Investment Authority, BPEA and Blackstone are potential suitors to buy the promoter equity stake in Cipla, which is one of the oldest drug firms in India. Now, none of these potential investors have put in a bid yet, but they are all seeking to put in a non-binding bid to purchase the equity stake in the company. Now, Cipla was founded in 1935, and the stake sale, which is on the block, is about 34%, which is owned by the founder Hamid family in the company. Now, if this deal goes through and a successful buyout would lead to an open offer from the successful bidder for an additional 26% equity stake in the company.
Thank you so much for that exclusive detail, Anurag, with regards to who could be likely potential bidders for that founder stake in Cipla. And we've got to know that are there BPEA also maybe considering to submit their bids separately, but this is all source-based information as of now. But with that, we're totally out of time on this edition of Buy Now Sell Now. It's a goodbye from Srishti, myself, and the team that put the show together. Thank you so much for watching.